Good evening, I'm Giuseppe Basile, I'm the analyst trader. You can find at the website www.fibstalker.com. I also post regularly on Twitter using the @fibstalker nickname. Good evening, today is Wednesday, August the 6th, 2014, and this video is a quick, brief midweek review of all the 12 markets I follow. I published this midweek review as a follow-up of my weekly review I provide to my newsletter subscribers. If you want to receive that weekly review, which is quite comprehensive, it's 3 videos on the 12 markets I follow: the euro dollar, the SP 500 mini, the dollar index future, the gold mini futures, and the Japanese majors: US dollar versus Japanese yen, the euro versus Japanese yen, the pound versus Japanese yen. I add also the euro versus the Canadian dollar because, of course, living in Toronto, living in Canada, that's important to me, but it's also a very good trade, very technical trade, pair forex pair to trade. And on top of that, I add the other majors: the pound versus the US dollar, the Australian dollar versus the US dollar, the US dollar versus the Canadian dollar, and the New Zealand dollar versus the US dollar. So let's start from the euro dollar, which is the chart that you see on the screen. Those who follow me, and most of the people who follow me, were able to trade this setup I provided at the beginning of July here. It was the same setup provided at the beginning of June. Things haven't changed actually, and the price went down into the first target 134.25, and I've received very good feedback about this trade, with a lot of people doing more than 4 reward to risk ratio on this trade. And if you time this trade on the smaller time frame, you could have done a very good 10 reward to risk, even 20 reward to risk. And this is the kind of trades I'm always looking for. One trade like this can make you a year, and you know, just a bunch of trades like this can make you 100% return in 1 year. So that's what you have to be on the lookout as well. So when it comes to the euro, you will remember that I mentioned a level that I was watching very closely, and that was a continuation short from the lows to lows. And I mentioned this 133.80 level of support. I mentioned also that if I would have seen price above 134.52, then this would have been a confirmation of longs. But look at what happened. I mean, this area was respected, and price went right into the first target of this setup. And this is a confirmation of 2 things. First of all, program trading is there and has been taking profit at these levels, almost to the pip. And these areas are very important because they can actually act, and they usually act as support and resistance, as we saw at the end of June here for the euro on the daily time frame. So at the moment we had this reaction, and again we have another level that we're going to watch very closely, and again another level that gives us information on price structure and price discovery. And that level is now the 134.39. So above that level there is a confirmation of this 133.80 area, 133.80 area of support here. And this, as I mentioned before, is an area of support that could has the potential to bring price all the way into 136.60, so all the way into that initial setup there. Is that impossible? Not at all. Go back to and study the euro dollar price history, and you'll see that that's very possible. So new level here, very important. 134.39 is the level, and 4 is are the levels to watch here. Moving to the SP 500, the 1908 I mentioned now a few weeks back, actually, since identified this new high here. It's now almost 2 weeks that we had this 1909 in mind, and as you can see, it found initial support, then it dipped into it 2 days ago, and today on Wednesday we saw this indecision bar here. So Is this market respecting support? Let's go and see on the 4-hour time frame what's going on. As you can see, the shorts are still being respected here, and this extension short is something that I traced actually yesterday, on in the my weekly review. So we had an initial measurement of short here from highs to lows. There was participation on downside on this 1971, and then price start moving lower, and at some point I traced the continuation short, and I mentioned a very clear level. We have a very clear level, and that level is still there. If 1939.25 is based on the upside, that's a confirmation of long. As you can see, price was actually broke previous lows here, but was not pressure on the downside was not able to bring price into 1899 here. So this level has not been touched. It means that this area of resistance is still there. If the market goes higher above this 1939.25, then that's a confirmation of support, and we should buy any retracement on the downside should be a buy opportunity. Moving to the dollar index, we know that the dollar index, I want to move back on the daily time frame here. We know that the dollar index is hovering around this first target area, 81.67. We knew this was a target area since back the first 10 days, the initial part of July here, and you can see how long does it take for this setup to get to target. That's why you don't have to rush. The market will take its time to complete a move, and if you want to see a setup all the time in the market, it's not like that. So it's better to follow multiple pairs rather than expect a good setup every day. As you can see, the daily time frame will offer you a good setup maybe twice a month. So if you follow 10 pairs, you might get 20 very good opportunities every month, and that's enough to make a very good amount of money in the market. So you don't have to rush. You have to trade rationally and trade smartly, only getting involved in the market when there is a good opportunity of making money with so low risk and high probability of getting to this first target. So as we can see here, as soon as the market, this dollar index went again into this 81.67, we had program trading taking profits again, and we know that there are two levels that we're going to watch, and the closer level is going to be a retracement into 80.90 here, and we already mentioned this, so you can review the last weekly review. If you don't have that, just subscribe my newsletter and you get the previous 6 issues of my newsletter. Moving to the gold, we had a surprise move on gold, and this again is one of a reason to always take half of your profits when when your gain equals one unit of your risk, and that's something I do all the times, and it helps me to be in the green still when we get days like this. And so what's the situation at the moment then for gold? For gold, we had, you will remember, we had this this trade, the 1320 acting as a resistance, brought price into the first target. It took 2 weeks to do that. Didn't break this all the way halfway back area of support here. So what happened that we have been looking at the next trade, and as you can see now, the next trade was not respected. The next level, the 1308.22, was not respected. So there is another level short that we have to watch carefully, because we know that this market is moving into this lateral movement here. But as we can see, the 1313 didn't come into play just yet. So which means that if we retrace here, we could get into this 1292 again and reverse and start moving higher. So Will gold move higher? We don't know. We are actually consolidating now since a while. We know that the sequence of measure move short has been broken, so this could be really a consolidation that leads to an inversion. So for now, if we get price into 1292 again and the sequence of measure move on the smaller time frame fails, so you can apply the fib stalking proprietary technique, which is a timing technique that allows you to procedurally test area of support or resistance identified by program trading. Then we can actually start moving higher again. So we will respect this setup here, which has the potential to bring price up again into 1372. Moving to the US dollar versus Japanese yen, you will remember that this market actually has broken the sequence of measure move short here in correspondence of this area, well dipped, and it price well dipped into this 101.53 area of support here, and market went higher and then started correcting. So I identified a level and an area of support that actually did not hold, and we can see it hasn't hold here. We can see this at 101.83 was pierced on the downside, which means that this market has now the potential to go back into this 101.53 area of support again. What is very important is that once again this market actually confirmed support also on the larger time frame, because when it trades from highs to lows, we saw that recently 102.86 was pierced on the downside, and this could be the reason why this market is coming back. So when the sequence of measure move lower fails here, is interrupted, and that could happen in correspondence of this 101.53 level, an area of support, then we should actually see an inversion here and a continuation higher. Now this is going down also because the US dollar is going down, so this could go much lower than this level 101.50, but again this area is very strong and it has found participation so far. I see no reason why this area should not continue to find support. And actually, if you're interested to the Japanese yen and you want to get a long-term view, you can review my 6-month checkup that was published on August the 1st on fxtrade.com. Go to my website, you can find the article there, or you can search on fxtrade.com for Japanese economy 6 months checkup and my name as well. Moving to the euro versus Japanese yen, we have same situation here. The euro has come down into this area 136.80 area of support. This acted as support now once, twice, and I suspect this is going to act as a support again. The euro versus Japanese yen might continue, might bounce higher here because of the euro strength that we might see in the coming days, and that all depends, going back to the euro, on whether we are able to break above this 134.86 if you 39.40 if you wish. This is a little bit of market correlation. I don't choose that, but clearly if the euro becomes stronger towards the US dollar, there is a high probability that it will become stronger against the other currencies, so that there will be an inflow into the euro from other countries and from other currencies. Again, when the sequence of measure move short fails here on the 4-hour chart and 15-minute chart, that's again a confirmation of this 136.80, and again you can use the fib stalking technique to do that. Pound versus Japanese yen, you will remember that in this pair I mentioned an area of resistance starting at 134, and this area of resistance actually brought price into this temporary support 172.45. I mentioned this area. I mentioned also that I didn't believe in this area, and actually to today on Wednesday we had price piercing below 170, 177. So this area of support is not there anymore. We're going to keep trading this market on the downside, and the next measure move, if we get a retracement now, is going to be into that 172.88 area of resistance, and that's what I'm going to watch in the coming days. If we get there in the sequence of measure move higher into this area fails, then we will continue to move into the 170.90 area or level here, and that would be the first target. This market has the potential to continue lower, of course, and I believe pound is in a larger correction, and some people believe it's still a long. I don't believe so, and I'll explain you later on why. When it comes to the next market, the euro versus Canadian dollar, actually you remember that I'm looking for this area 147.10. That's my first area of resistance. So we saw though price breaking the sequence of measure move here higher, and that's because of the current weakness, short-term weakness of the euro. I think that, and it's possible that this market is going to continue higher into this area, but it's also possible that, you know, we should also consider if the euro actually reacts to that area of support, we could also see a much higher reaction of the euro versus the Canadian dollar, right into that 150 area of resistance. If we get that, there is going to be a great trade short for this market. Moving to the pound versus the US dollar, the reason why I don't believe this market is actually in a long anymore is because, you know, this has been trading in extension longs, and we saw second target being hit recently here at this 170 area, and the next measure move in the sequence has badly failed already. So it did just not fail for a few pips, but look at this. I mean, the market just dipped well below that level. So to me, this is not a long, and there is the potential for this market to retrace all the way into you know, up to and into this area starting at 160 basically. So this market could just follow the euro in its correction until the euro gets into that 130.20 area. I don't see strong support from program trading, and that could be happening to pound as well. So pound is basically, and I believe it's catching up with the euro at the moment. So still, if the euro puts in a little bit of strength, we could see this market moving higher, maybe into this 170 area, and then from here, if the sequence of measure move short fails, we can actually trade a very good short here. Now, can you see that every time I wait for confirmation, I never trade this level snaked. I mean, I would never take a position here 170 with a stop above 170.47. That's not the case, because the market can overshoot this level and then break the sequence of measure move after that. So these levels are an indication, they're not burned in stone. Now, if the euro continues to move lower at some point, this market will follow, and then I will know that at that point the sequence of measure move, the interruption of the sequence of measure move long is my signal to enter short, and actually this signal could even come at previous highs. We don't know. So it's very important to get always a confirmation, and I use the proprietary timing technique, the Fib stalking technique, to get that confirmation. Moving to the US dollar versus the Canadian dollar, this market is now apparently following that scenario that I depicted with the area of resistance starting at 109.50. And as you can see here, now we got today this red bar here. Again, on the daily time frame, we have to use the new highs that were printed today in order to see what is going to be the next the next measure move, whether this market is going to continue in the extension long with the next measure move coming here at 188, 108.89, 108.90 area here. So if the sequence of measure move is interrupted, this market reverses and continues higher in the sequence of measure move. But if 108.65 fails, then this is a confirmation of this area of resistance, which means that, you know, a safe would be, nothing is safe in the market, but a reasonable trade would be to enter on this breakout with a stop above highs. Be very careful. That's not the way I trade. I always wait for a retracement. Otherwise, I mean, I trade half and then I wait for a retracement and trade the other half in the retracement. So be very, very careful here. Don't risk money and don't risk more. I mean, don't risk more than 1% of your capital, because there's no business in doing that. And you can make tens. You can make several 10%, several percents every year just using a different money management technique. So there's no need and no business in risking a lot. The money you have, you should risk in learning how to make money, risking only 1%. Moving to the last market, that's the New Zealand dollar versus the US dollar. And you will remember that I mentioned that this market had the possibility to retest the 0.8415. It went very close to it, 0.8422, 7 pips, so I would consider this traded. So this market is actually retesting its support long. So it went all the way up and it went all the way down. So at the moment it's in a lateral move, and when the market moves again, and if it moves again into this 0.8415, we will know whether this market actually has will actually trade the support here. So we will know whether the support will be traded or not. Now, as you can see, this setup, if we consider this measure move observed after the fact, we had a participation in this 0.8524 area and price hit the first target. Now, we identified that after the fact, but now we can use it before the fact, because then, as you can see, we can actually see that this market is trading a short here. So above 0.8493, we can say that this market actually has reversed and now has the possibility to go all the way back up into that upper edge of this trend line. I don't use trend lines. I just use trend lines in this situation when the market is, I know the program trading is not committed on the long side, neither is committed on the short side. That's the exact definition of a sideways market. So if market goes above 0.8493 level, that's an indication for me that we might be seeing again a move higher, and that's compatible with a US dollar moving lower in the coming days if we get the confirmation on the euro dollar. This is it for my week midweek review. I hope you enjoyed this review. I hope it makes sense to you, and for sure I believe it makes sense if you watch also the weekly review that I send out to my newsletter subscribers on the weekend. So if you want to get that, just go to my website fibstalker.com, subscribe for free to my newsletter, and you'll get that as well. So this is it. I wish you a very good evening, a very great continuation of the trading week this week, and I'll see you on my blog, in my newsletter. And please, if you like this analysis, just share it. And if you see things differently from the way I see, I'd love to hear from you, and please let me know what you think about these setups and your setups as well. I hope this helps your trading, and I talk to you soon. Bye bye now.